Hello and welcome to On the Record with me, Shireen Bhan. We're coming to you from the JP Morgan India Investor Summit, and it is my pleasure to welcome on the program ITC Sanjiv Puri. Sanjiv, always good to have you on the show. Thanks very much for joining us again.
Thank you, Shireen. It's always a pleasure to interact with you.
You know, let me start by asking you about the big India opportunity. We've just come away from the G20 summit where ITC was in a way responsible for ensuring that the guests go away with an India experience. So, you know, this is the moment that everyone believes is the moment for India. From an ITC perspective, what does that mean? Are we likely to see you increase your capex significantly from the average 3,500 annually that you have been doing?
Absolutely, it is indeed, as you very rightly put, India's moment for a confluence of factors. One, of course, the economy, the macros are doing well. I think there's been a lot of good policy interventions, not just policy interventions, but you can see it on the ground, whether it's a digital infrastructure or physical infrastructure and many more. So it's really worked out well, and it's wonderful that despite the difficult global situation, Indian economy is still growing. It's growing well despite, you know, exports being under severe pressure. So indeed, things are well placed as far as India is concerned. And as you know, in the new world order, and given India's advantage of demography and the scale opportunity that India can provide, whether it's manufacturing or services, I think there's a lot of global interest to look at this as a hub, not only to deal with the growing, domestic consuming market, but also as a hub for, global exports. So it's a great opportunity for India, and certainly it's very positive for all the segments of ITC. Most of our segments are related to the, consumption in the economy. We are a very India-focused company, and we are very confident and optimistic. Last year, we commissioned 5 manufacturing facilities. Right now, 4 more are in the pipeline. When I say in the pipeline, it is not on paper. Work is actually happening on the ground. One, in fact, should be commissioned in the next, 12 months itself. And we are also scaling up our hotels footprint. In the last 16 months, we opened 18 hotels. So in all the segments, we see immense amount of opportunity. We are very optimistic, and we continue to invest.
Well, let's unpack this, and this is the first time that we are speaking to you after the hotel demerger announcement. So let's understand where things currently are on track as far as the movement of shares is concerned, as far as the hotel business is concerned, and what's the outlook from here? Because you will continue to hold about 40%. Why did you feel it necessary to do so, and what's the plan now as far as investing in the hotels business is concerned from here on?
So first of all, yes, as far as the process is concerned, it's just started. So, I mean, nothing to say that, nothing much to say, it has just started. It's about a 15 months journey, and we believe it's well on track because we are well prepared for it. As far as the restructuring is concerned, I think, this 40% issue has actually generated a lot of media interest, though our shareholders were fairly complimentary in the AGM, and I had also occasion to hear the same, compliments from certain institutional investors, because this has been very well thought out. So that fundamentally we must recognize that whatever we do must position the business in a much stronger wicket than what it was before. And for that purpose, for the hotels business, first of all, to grow and thrive, and to actually benefit from the tailwinds that this sector has got, it's important that it continues to enjoy the trademarks, the corporate goodwill, and all the processes and the synergy from ITC. We have huge investments in digital, which is also available for hotels. So it's important that the hotels has access to this. Similarly, for the growth of our, say, for example, FMCG businesses, the foods business, I have often spoken about the power of synergy. It is also a way for us to create new growth opportunities. The cloud kitchen comes together because of hotels and the foods business, right? So we don't want to lose this value accretive opportunities when we reorganize ourselves, right? And what is happening after this is that as far as ITC is concerned, our return on our ROCE is improving by 2,000 basis points or thereabouts. Our ROIC is improving by nearly 1,000 basis points. So there is productivity or financial metrics of ITC also improve. Shareholders of ITC get a direct 60% benefit in the hotels business, and there is a determination of the price based on market mechanics. 40% is held indirectly through ITC.
Yeah.
The hotels business will attract the right kind of investors who are interested in that kind of business. So all in all, it's a win-win for everybody. I think 40% was required so that synergy is sustained and the operations of hotels are stabilized. It gives confidence to all the stakeholders of the hotels business, whether it's employees or other stakeholders who partner with us. And therefore, I think that 40% was definitely required.
Okay.
And as far as investment in hotels is concerned, yeah, we have a strategy which we have said is asset right. That's the course we will stay. It is different from asset light.
Yeah.
So it will be a balance between management contracts and our own properties. And this new company has a very strong balance sheet. It will be debt-free with marquee properties and a very strong balance sheet, good cash flows. And it will also, as we have said, be funded for its capex requirements for 2-3 years through liquid investments. So the capacity of this new entity to raise capital for the investments it wishes to do by way of, through its own resources or through debt is very strong. And of course, always the possibility is there to, raise through equity route also. Because it's a very strong balance sheet of this enterprise.
But, given the aspiration that you have for the hotels business as well as the growth opportunities that you foresee, what do you believe will be the capital requirement to fund those aspirations over the next 5 years? What kind of capital raising potentially could we be speaking of?
Well, I do not see the need immediately or I do not foresee any significant need for capital raising. I think the cash flows plus the liquid investments that will be provided for the 2-3 years of capital will be sufficient. Because remember that we have a very strong footprint already in most of the metros, right? And therefore the incremental investments that we will be will be in maybe tier 2 towns and so on and so forth, where the sizing is different. Sizing is different, right? So therefore, I don't see any major requirement. But if, for example, an opportunity which cannot be predicted, say an opportunity for a trophy property comes up,
right,
and it requires substantive investments, I'm saying the enterprise has the capacities.
Are you looking at any trophy properties today?
No, I don't know when it will come, what will come. I'm just saying,
potentially.
Potentially, you could you have to keep your eyes and ears open.
I would imagine. Speaking of keeping our ears and eyes open, we long anticipated this demerger, and eventually it's taken place much after we had expected it to take place, and I would imagine that COVID played a part in that. The question now is what next in terms of value unlocking? Is there anything on the anvil up for consideration? Is there anything a few years down the line that work has started to play? I mean, as far as the FMCG business is concerned, the agri business is concerned, is that potentially in the direction that you could be heading?
See, I've always maintained that value will be created based on business fundamentals, based on sustained growth and profitability of enterprises. And though it's not for me to really comment on, what happens in the market, I think the valuations are determined by market players.
Yeah.
But I think it's the role of enterprises to create the value. And in our case also, if you see it's fundamentally because of growth and profitability that it has had an influence on the valuations, and that's what we are focused on, right? And that's the fundamental things. The role of management is to make sure the businesses get more competitive, are equipped for partaking or actualizing all the opportunities, compete in a manner that's competitively superior. And in that context, we will also have to look at how we organize ourselves, whether together as a conglomerate or does something separate make sense. And based on the merits of the case, one will take a decision. Right now, nothing is, there's nothing that we have called out. Whenever there's something on the table, we very transparently call it out.
Of each of the sectors or each of the verticals that you are operating in today, given the growth potential as well as the ability to unlock value, where do you think it would make most sense to consider heading the hotels route?
Well, let's take that when it comes, and where the opportunity is, right? I think it's just right now it'll be a little speculative to think about it.
Okay.
It'll be a little speculative. One has to look at it in the context of the time when it is decided, right? As far as if you were to ask me this question in another way, that within the ITC portfolio, out of our newer businesses, leave aside the traditional businesses, where is the biggest opportunity to create value? Of course, it's on the consumer side.
Right.
That I would say, yes, it's the consumer side has got the maximum potential.
So speaking of future opportunities as well as growth potential, the last time that we spoke, you talked about an untapped opportunity in the export market, and you said that that is where you believe that you should be doing more. Given where things currently stand, where do you believe you've reached, and what is the road ahead on the export opportunity specifically?
So we are approaching the export opportunity in two ways. So one are, I would say, let's say the proximal markets, and one are the larger global markets. Now, as far as the global markets are concerned, we have been in the process of setting up our distribution infrastructure. It's there now in about 60 countries in varying degrees of maturity.
Okay.
And that's the process that is on. It has, of course, not gone with the speed that would ever wanted it to, because there have been some disruptions during the COVID period because of supply chain and the cost of transportation, etc. But nonetheless, that's behind us, and we are building up. I think we're making a decent amount of progress. In proximal markets, the way we are looking at it is it's a more intense market development, where we are even exploring the possibility of investments, stroke even if there is a possibility even of an acquisition.
Okay.
And in Nepal, where we already have a subsidiary, for example, we've already commenced manufacture of FMCG, certain categories, and over a period of time we will build it up. We are looking at other proximal markets also.